Hi everyone, it is Chrissy and
Gavin Guthrie, hi.
And we are here for Mortgage Mondays. We're at Gavin's fancy new office.
Yeah.
So we are out here off of Superstition Springs.
Yeah.
So I didn't see the Krispy Kreme by the way. When I
It's that way.
Okay,
yeah.
so it's out
We'll hit it on the way up.
Perfect. So wanted to talk today, we're going back to basics. We're going to talk about our guys, Bob and Tim.
Yep.
Bob, our smart home buyer, and Tim, he's made some mistakes along the way.
Not so smart, yeah.
So going back to basics, talking about do's and don'ts when buying a home. So,
yeah. So we got, obviously there's tons of things, tons of places you could take this. I think on the do side, the number one thing, and we'll probably come back to this over and over again, is you got to talk to a lender. You got to start somewhere. Don't assume you know everything. Honestly, there's a lot of stuff we as lenders don't know, but we can help you figure out. But as a home buyer, don't assume. You don't need 20% down. You can get in with less. You don't need to have perfect credit. You can have a lower score. Like, there's lots of options. So you got to start by talking to a lender, and talk to a couple lenders if you have to make yourself feel good or comfortable, but you got to start somewhere. So that's one of our do's. That's something
what Bob would do.
That's something Bob would do. He would plan ahead. He would see that, hey, maybe in a few months I think buying a home is going to make sense.
Yeah.
He would start that process a few months in advance, and let's talk about his credit. Let's talk about the assets that are needed, and the documentation, just so that we can get everything, all his ducks in a row.
And set Bob up to be successful when he goes to buy a house.
Yep, and it's really going to bring that stress level down. A lot of people talk about how stressful it is, but truly, if you plan ahead and you prepare, the stress that comes with buying a home is just going to be a whole lot lower.
Okay.
So
for Bob, he's contacted you. He's about 3 to 6 months out. He called you. What are some do's that you would tell him to do?
Some do's would just be obviously get your money in place. Don't be moving money all around. Like, if you're going to have a down payment, if you've got it in savings, or if you've got it in a 401k, or you've got it in stocks, whatever you've got it in, I would suggest don't move it around. There's no point in
leave it there.
Moving it all around the place. That's just going to create more documentation problems down the line.
Okay.
Don't borrow money.
Okay.
Don't. Really, that's a big one that people struggle with is, if they're moving money around, we have to ask for all sorts of bank statements, and everyone gets frustrated.
Okay.
So that's a big one. It's easier to kind of go through the don'ts.
Okay.
The do's are just the opposite of the don'ts.
Okay. Well, this is Bob, so let's talk about Tim. Tim's made some mistakes. So Tim, say Tim's working with me. He decides Friday he's going to buy a house.
Yep.
We go out on Saturday, we find the house.
And
he wants that house.
He wants that house, yeah.
And so I call Gavin.
Exactly. So obviously a guy like Tim, he's going to be scrambling. He's going to be last minute, hey, we need to do an application.
This is his house.
This is the one he wants. I'm going to be out at, Chili's on a Saturday night. I'm going to have to walk out to the car, take his application. In an ideal world, if everything is perfect, credit score, money in the bank, income's easy, we can send a pre-qual real fast.
Okay.
And that's totally possible. But what happens if something comes up on his credit that's not quite perfect or questionable that maybe we need to address? Or what if the credit score is not quite where we need it to be? Then we got to talk about paying some things off or retooling the credit score a little bit.
And a lender can't issue a pre-qual confidently without all of this.
It's going to be worth about nothing. You know what I mean? Like, we don't want to put you in a position to go get under contract, spend all this money on inspections and appraisals when
you can't fund the loan.
Exactly. You're not fully qualified. So that's a big one.
So say Tim does miraculously get this house.
Yeah.
And we're in escrow. What are some things Tim should not do?
Yeah, these are all things that have happened.
Okay.
So some things Tim shouldn't do. Don't go change jobs, and just because you got a better paying job, don't change jobs right in the middle of a home buying transaction. That's going to be problematic. Maybe not so much if you're a salaried W-2 straightforward type position, but if you're any kind of commission, bonus structure, things like that you're relying on to qualify, it could be very problematic to change jobs in the middle of a transaction. Don't apply for new credit cards or credit in general. A lot of people, they'll end up at, obviously you're moving into a new house. Maybe you need some blinds, maybe you need appliances, whatever it may be.
Heard of it.
Oh my goodness. They go to Home Depot, it's a week before closing. They buy all of this stuff, and they put it on or they apply for a credit card because they're going to save 5%. Yeah, they get an interest deal or they're going to save 5% by doing so, and it just torpedoes things.
Okay.
And there's two things that can happen. One, it can delay things. If you can still qualify with that debt, it's just a delaying thing. We got to get documentation, we got to get a credit supplement, we got to get all these things to make sure that debt's accounted for in your file.
So just to clarify on that, lenders pull credit at the beginning and at the end.
Yeah, we're just typically there's some credit monitoring happening. So if we see a credit inquiry hit a week before closing, it's going to come up.
Okay.
Now, obviously, if you can still qualify with that debt, it's just paperwork. It's just maybe time. It might delay things a day or two. The problem really is if your debt to income ratios were really, really tight, and all of a sudden you add a $100 or $150 credit card payment, you don't qualify for the house anymore. You're done.
You've got new blinds and no house.
Yeah, new blinds and no house. So that's a really big one. I've seen that one happen a lot. Really one that comes up, and that's why it's important to talk to a lender soon, is earnest money. When people go to, you're going to put $1,000, $1,500, $2,000 in earnest money down when you go under contract. A lot of people go to their safe, or they go under their mattress, and they pull that cash out, and they put it in the bank and then write the check. That can be a problem, because we're going to get that bank statement that shows that deposit, and we're going to say where'd it come from.
Like my bed.
Under my bed, yeah, and that can be problematic. So those are conversations to have early. If you do have cash there, like maybe we got to get it into the bank sooner, let it season.
Like 3 to 6 months?
Usually about 60 days, depending on the loan type and what's needed, but usually about 60 days. But that's why it's good to start soon. We can talk about where that money's going to come from, where the earnest money where the earnest money's going to come from, and the best way to handle that. So I think it's not a deal breaker that you have cash or need this money that you've got in cash towards, to buy the house. But let's just talk about it. Let's make a plan that works and it's going to be simple, rather than causing you stress and problems at the last minute. So that's a big one. This is one. If you've got collections or you've got collections, don't just automatically assume I got to pay those off before I apply. A lot of people will do that. Will pull their credit and they'll be like, okay, well, I see a couple of these, a couple of that, here's your score. Like, oh, I just went and paid all of those off. As soon as those update on the credit report, a lot of times it can actually push your score down.
Okay.
Because it's going to re-ding it. Basically, as soon as that collection company updates the credit bureaus, it on your score at least, it looks like it's a new collection.
Okay.
It'll re-ding your credit score. Long term, it's probably beneficial, but when you're in the process of buying a home, I would say leave it alone. We can pull your credit. We can run some simulators. What happens if you pay it off? What happens if you do this or that? But don't just assume you got to pay those off, and don't just jump right in and start firing money away, because it could hurt you in the end.
That's a lot. That's a big one for a lot of people, because they think they need to clean up their credit to purchase, and you see a $50 collection, I'm going to pay that off.
Oh, that's an easy one. Yeah. And
it costs you thousands of dollars.
Yeah, and maybe it takes you from a 720 down to a 680 credit score, and on a conventional loan, that's a big difference in interest rate. So something to think about. I think all of that kind of comes right back to start early, talk to a lender, ask your questions, ask all the questions. Like, people say it all the time, I'm so sorry for all the questions, and I'm like, please, it means you're understanding, you're learning the process. It's gonna equate to less problems down the line in the transaction.
Honestly, rather ask and have the answer than make a mistake and end up losing out on your house.
Yeah. So I think it's always worth a conversation to have, even if it's stuff that you think is a problem for getting a loan. I mean, a lot of times people, like a foreclosure, a bankruptcy, something doesn't show up on their credit, and they kind of just assume it's gone because it's not on my credit. And I've seen that where, like, someone had a bankruptcy 4 years ago and it's not on their credit. And, like, okay, that's great, but it's gonna come up.
Okay.
It just 99% of the time it's gonna come up. It's something we got to address. And certain loan products, it's not a problem. Other ones it is. So we just got to make sure we fit you into the right one. So it's just better to be open. Let's talk about everything. Let's get it all out on the table, and let's help you just navigate getting a home loan. So, yeah.
Great.
I think that's about it. I mean, there's a million things that you could, do or don't do. I just think it comes down to just talking to someone, talk to a couple lenders, talk to some people that you trust, and just get your questions answered.
I would echo that too, exactly. Just like we talk about buying a house, you talk to a realtor. Just start the process. You don't want to decide you're going to buy a house, call the first realtor you find and go with that. Same with the lender. Like if you know you're going to buy in 2020, this is the time to start calling one of us.
Exactly.
Start talking to us. Know what your buying potential is. Know what your plan is. Let's set up a good plan for you guys and get you guys into the house with the least amount of stress possible. So, and that's what, again, to bring it back, that's what Bob would do.
Exactly. Be like Bob. Start early, and really just make a plan, because it's gonna lower that stress level during the home buying process, and just put you in an overall better position.
So you can find me here at this channel. You can find Gavin at
Gavin Guthrie, Citywide Home Loans, or you can. Best way is my cell phone, 480-297-9421.
Thank you guys so much for watching.
Thanks.